Good Monday morning, buddy. How's it going?
Hello, good morning. Welcome to the May 8th edition of the Crypto Flight Path. It's Macro Monday here on the CFP. So let's kick it off, shall we?
Yeah, it's quite the interesting weekend. A lot going on in the crypto world. We can take a look at just the overall markets here. We're down a little bit to start the week. No big deal. Perfectly normal price action. We're still ranging on Bitcoin. Nothing's really changed there. We've got some macro things happening this weekend. So let me pull that up real quick and we can run through this real quick. Is there anything on here that really catches your eye?
Yes, there are two things. Well, I take that back. I'll say three. Looks like we've got some Fed talking heads tomorrow, which is Tuesday. Nothing of super, or as they would say, nothing of great import for the U.S. today. There's some Treasury bill auction stuff, because of 3 and a 6 month. But this is just things that happen. These were going to happen with or without whether we were watching. Looks like someone from the ECB is talking, like the European Central Bank is talking today. But tomorrow we've got ECB talking head again. Then we've got Fed US. So in the US, we've got Fed Jefferson, Fed Williams, and it looks, yeah, I believe those are the two for tomorrow. But Wednesday is where it gets a little more sticky, perhaps more interesting. I think what's really happening is the pause we've seen in price action, or the oscillating and ranging that we've seen, is just around what's coming on Wednesday. Is that the CPI, like inflation? So there's the rate, the core inflation, and then the inflation rate, and then more importantly, the overall CPI numbers get released, among a bunch of other things around crude oil, which doesn't really move the markets necessarily. I would argue that those others move the crude oil markets. And then rounding out the week on Thursday, there's PPI and some more Fed talking heads here in the US. So Waller is another Fed governor that's going to talk on Thursday. And last but not least, on Friday, there's some consumer sentiment, the Michigan consumer sentiment release, which is, if you're not paying attention, or if you haven't been paying attention before, it's not really gonna, I don't think it's gonna move mountains or anything. But the last two things to be aware of for this week from the macro, or on the macro front, is that Bullard and Jefferson from the Fed are going to be talking again. Looks like they're speaking later in the day on Friday, like quarter to 8 p.m. Eastern. Looks like.
That's never good.
Yeah, well, here's what I can tell you is that they typically, I think that the Fed folks have learned that you don't open your, like, when you're in that role, in that position, unless you're the chairman or the chairperson, and you're already scheduled to speak during market hours, you do most of your talking off the outside of market hours. That way you can't be, I guess, accused, or there's, you have plausible deniability that the things that you're saying affected the market in some way that some other group of people didn't approve of or like. And that's usually a good indication of, let me wrap this or round out this thought, is that in those situations, it's interesting to hear people's reactions to things like Fed this, Fed that, blah blah blah, because what they're really doing is they're talking there's a saying is that you want to be careful not to talk your book or reveal how you're positioned, and or how you want to position in markets in general across the board. And so when you see, or when you learn of groups, like these little subcultures of people, perhaps is one way to categorize it. When you hear them react strongly to these, there's this guy said this, or this girl said that, or this official said this, and they have a really strong opinion about it, it's likely that there's some energy trying to make its way out, and they're inadvertently talking their book. And that's something that we learned to look for at the fund, was to try and pick up on this so that we could be at a minimum aware. So anyway, that's my armchair analyst outlook for the week, is that really the biggest thing is CPI on Wednesday, and there'll be a few Fed governors. But I think the last real sentiment or thing from my perspective to just be on the radar is that I think what the market's looking for now, in general, is the next language from the Fed, whether it comes from Powell or any of the Fed governors, where they start to IV drip by way of language and communication via the mainstream media what their next move is. And what I think the next move is probably going to be is another 25. I'm just telling you what I think it feels. I think there will be another hike, whether I like it or not. I think they will do this again because my conspiracy theory hat goes right on here, is that it gives them plenty of runway to start first pausing. That's just as good as a cut when things are nasty and like banks are failing and there's recession and then there's lots of blood in the streets and the mainstream media about how the economy is doing this and oh my gosh, people are suffering, blah blah blah. Meanwhile, they're tweeting about their misery on their $1,200 cell phone and their $5,000 laptop that the world is ending. Take my opinion out of the equation for a second. All I'm trying to communicate is that what we're really looking for here is a direction from the Fed. And I think we're at this like tipping point where we might get sometime into the fall, we might get the first syllables coming off the lips of a pause from a monetary policy / rate hiking perspective. And that will have a strong effect on people's behavior, in my opinion.
Yeah,
I don't know which way, but that's what I think.
Yeah, no, I think that was well said. The funny thing about this is, if you're just starting to pay attention to this, people, when you look at these numbers, they're looking for bad news, and they're looking for bad news because they want the Fed to stop raising rates, right? Like if you get these numbers to be quote unquote bad enough, right, that'll indicate that the Fed has done its job, which is ironic that the Fed's job is to basically crush the economy so that they can, later come back and then cut rates again, and then everybody can be happy. And then we can go through this entire cycle all over again,
Then, yeah, exactly.
It's
exactly.
all absurd. But it gives you a greater outlook on how this thing all works, right? Everything is based off, it's just one trade. It's just all around the Fed, and it's all based off interest rates. And that's the big macro outlook. So if you're into crypto, right, you got to kind of understand this stuff, because unfortunately right now it does play a big role in what's going on. So that's why we talk about it. That's why we bring it up. It's got to be on your radar. It's not fun. Like, I don't like it, personally. I didn't get into crypto to learn how the traditional finance system works, but that's one of the side effects and one of the benefits of getting into crypto is you're forced to kind of understand this stuff, and it helps you form, a thesis on where things are going to go in the future. But want to transition go ahead.
I was just going to say, it's kind of like, as a child, I didn't like taking my cough medicine when I had a cold, but as an adult, I learned that sometimes it's necessary to take cough medicine, even if it doesn't taste great. I know that there's some benefit. There's a little bit of like follow-on benefit, and that's the way I look at the way I learned to approach this idea of like tuning into the macroeconomic world, was to get close enough to it so that I could look at it and understand at very high level in broad strokes what might be happening, even though you don't really ever know exactly what's happening. But there's certain things that you pick up on over enough time that you can kind of get an idea. And I think the most important thing about what you said there is that as far as interest rate policy goes, is that in the debt-based system we live in today, the access to capital or money in the system is crucial for all the reasons that the Raoul Pauls and the other guy he has on, I forget his name all of a sudden, of course, classic. But the point I'm trying to get to is that we have to keep rolling the debt, or we have to keep refinancing the debt, and that is going to happen. And when that happens, new money comes into the system, and it facilitates it facilitates, at the end of the day, it facilitates debasement of the monetary unit, because there's more of it, and it causes asset prices to rise. So all we care about necessarily is positioning. And if you're positioned so that when the system continues to debase the money over time, because we have to roll the debt again and again and again every 3.5 years or so. And the trade, and your words were excellent there. There's only one trade necessarily, and that's to be in assets that are priced in the currency that's being debased every year by X%. That's literally the only thing. I mean, if you don't care about any of this other stuff, like all of the different token names and all these other assets, just if you learn nothing from anything I've ever said or you've ever said or anything we say on this, is that the monetary unit will continue to be debased until morale improves, and the only the way to protect yourself and more importantly your purchasing power is to take when you earn some portion of it. Not financial advice. Talk to a financial advisor and listen to what they have to say. Perhaps get positioned into assets that are priced in the monetary unit, like dollars or euros or whatever, and hold those instead of some cash, and let those appreciate in price by virtue of the fact that the monetary unit is being debased. You don't even have to do anything but just watch, and that's what's happening.
That's it, and that's well said. I mean, that's all you can do, right? And there's one way out. Well, I guess there's two way outs for the Fed and the dollar and this whole system. Either they continue to do what they've always done, or they let it go bust, right? And they've never let it go bust. You could talk to your blue in the face about everything happening right now, but the most likely outcome is they will raise the debt ceiling and they will pump more money into the economy via QE or some other form or fashion. So right now, in this 18-month period that we're in with these rate hikes, is just a blip in time. They will continue to go to the default mode, which is print, 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 unless the system breaks, and that's a world that we've not yet experienced, and quite frankly, I don't think anybody's ready for. So what we should hope is that they continue to debase the money. As silly and crazy as that sounds, that's the only way.
It's the least worst thing, quite frankly. Ironic, and this is ironic, or I don't know if it's ironic, but it feels silly. But the world that we live in today, with all of our modern convenience, our stable power grid for the most part. I mean, there's some parts of the world that don't have a fraction of what we have here in the U.S. and other developed nations. So I can't express how grateful I am for all of these things. That aside, what I'm trying to communicate is that this is going to continue because the alternative is just like orders of magnitude worse, if you want my opinion.
Yeah, it is. And the whole thing's criminal. I mean, the entire central bank system is criminal. It's theft. It's theft through taxes. It's theft through inflation.
And debasement. That's the other like nasty thread here, is that like your purchasing power is literally being vacuumed out of your money, and you can't do anything about it.
That's the world we live in, unfortunately, today. And are there things being done? We can go through that at some other point, right? The thread here is that it is what it is, right? C'est la vie. There's not anything we can do other than put our purchasing power into assets that don't debase. And so I think that's a good place to transition to what happened over the weekend, and we can talk about what happened with Bitcoin fees. Here's an article from CoinDesk that says fees on the Bitcoin blockchain have surged to 2-year highs as the Bitcoin request for comment BRC20 tokens and the rising popularity of the Ordinals program or protocol drives demand for block space. And so that's a lot to unpack there. A lot going on, but essentially what we have had over the weekend is there is a new protocol on Bitcoin called BRC20, which essentially allows people to make JPEGs, right? Like that's NFTs on Bitcoin. And what's happened is there was a surge in demand, which you can look at two ways. Okay, that's great for Bitcoin, because what it does is it raises the fees, and when the fees are higher, that's great for the Bitcoin miners, which is an incentive. And that's one of the issues that people bring up with Bitcoin is the security of Bitcoin over X amount of years, as the halvening continues, the fees for miners will need to be driven up somehow to incentivize them to keep mining. Now, the other side of that is price will do that on its own. And this is a very heated topic within the Bitcoin community. And you'll go crazy reading the Bitcoin maxi post versus, people that are in favor of this. My position on this is something that's happening. People aren't going to stop using it. I think the way you get around high fees on the Bitcoin network is with Bitcoin Lightning Network. Ted, do you want to jump in and
Yes, this is literally what the Lightning Network was designed to stave off, or the problem that Lightning solves is a way for people to transact amongst themselves cheaply, effectively, and quickly without having to settle yet in on-chain Bitcoin. Okay, so I'll make the analogy real quick. Back in the old days here in the US, if you had some gold before the government seized it all, which you should look into and understand that there was a time when it was illegal and you could go to jail if they caught you with gold. Okay, this country was built on people walking around on US soil, what is now US soil, holding gold and using it as money. And then what you used to be able to do is take your gold and put it in the bank. So you don't have to carry it around with you. It was a little bit dangerous in those days, you might say. You could get some paper notes
today.
Okay. Yeah, it is. It's probably even more dangerous nowadays. Anyway, on point and on topic, you used to be able to take your base layer money, your base layer. There's fundamental layer here. You take your gold, you put it in the bank. Let's say it's worth 100 US dollar bills. Okay. You got the dollar bills and you walked around town with those. And what you understood back in those days is that at any time you could take those paper notes and redeem them for the same amount of gold. So let's say you had $100 worth of gold and dollar bills, and you could go around town and transact. You could get paid. You could pay for things. Let's say you brought $110 back to the bank and said, I'd like to get my gold, please. They'd say, okay, well, you came in here with 100, so we owe you that. And now you're giving me another redeemable note. It's called a bearer asset. That entitles the bearer of this piece of paper here to the equivalent amount of gold. I have to redeem it to you because that's the law. And that's the law. That's the way it is here. So then you could take your $110 worth of gold and you could go do whatever the heck you wanted to do. So the analogy I'm trying to make here is to help people understand that today Bitcoin can act as the base layer monetary unit. It sits in your wallet, perhaps, or if you participate, it facilitates the ability for people to transact on another layer equivalent to the paper notes that used to carry around in the world, called the Lightning Network. And the Lightning Network is in a nutshell, without getting into any of the technical stuff that you just like to say, I'll say this a million times, that you don't have to know how the watch was made or even how it works to be able to use it in order to tell time. So what I'm trying to communicate is that you or anyone else that has a Lightning wallet, we can transact on the Lightning Network today without having any knowledge of how it works. And at the end of the day, we get our Bitcoin. We can have our money in its base layer form once we've gone out and transacted. So what we're seeing now, and I'll get on to what's going on with on-chain Bitcoin and this idea that people are trying to transact in base layer on-chain Bitcoin.
Bitcoin would be considered a layer one.
Layer one, that's right.
Lightning Network is considered a layer two.
That's right. So the L1 in this case is there's a lot of activity. There's a lot of demand for the space inside each block that's being minted on the Bitcoin blockchain. And remember, Bitcoin network is doing exactly what it's designed to do, and it hasn't skipped a beat. This is literally what it's designed to do, and it's responding like an organism to the demand. And the most important things that I think people don't necessarily know or think about is that the fact that no one is interfering, like there's no third party interfering with Bitcoin's operations, And what I mean by that is, take a quick tangent, is that in the traditional finance world, people can create dollars out of thin air and put them into the system and do with this whole fractional reserve thing. And they're like, let's say you can't get dollars from one bank, you can go to another. And if they're willing to take the risk of doing this, they can create some dollars. But they could go out of business and you have a problem then. What I'm trying to communicate is that the demand for transacting on L1, layer one, base layer, on-chain Bitcoin is, the demand has risen. And people are having some trouble with this. They don't understand. And that's okay. What I'm trying to get towards here is that this, it's not, or what I think a lot of the mouthpieces on the internet, remember, you got to take everything you read on the internet with a grain of salt, including this, is that there's a lot of jaw flapping and a lot of sentiment that in the short term, this is a blip on the radar. This whole block space thing that people are screaming about now is just people's opinions. Okay, Bitcoin is doing exactly what it's designed to do. This is the point I want to stress. It's doing exactly what it's supposed to do. It's responding to demand. And what I think people are overlooking here is that there's a substantial amount of demand lately, as if there wasn't enough demand already, to what the Bitcoin blockchain, the network, provides. And if transacting on layer one is too expensive for your tastes, or it's too slow, then you need to learn in very simple terms that there's a layer two solution that is designed explicitly for fast, inexpensive, frequent transacting among participants in the system. That it literally solves all these problems that people are complaining about. But
Well, and it's
I think
still it's still new. It's still being built out, right? And it's made a lot of progress over the past few years. But here's a real world example, right? Say you live on a Bitcoin standard, right? And the issue then becomes when the fees are high. To buy a $5 cup of coffee costs you $15, right? Like that's the, and so the argument then is, well, Bitcoin won't serve as a good money. Well, that's why layer twos are being created, right? And layer threes and all that stuff. But all this stuff is still new and it's still working. I think this is a good test for Bitcoin, right? I think it's a good way to understand, what potential demand in the future might look like. Because if you have 4 billion people using the Bitcoin network, you're going to have high demand, right? And if high demand results in higher fees, you need a layer two solution to be able to transact, and not have to pay those fees, right? And so I think people are freaking out right now. I think it's all kind of silly in my view of some of the reactions over the weekend. This isn't like something that wasn't on the radar. Like, people are aware this is happening. I think it serves, like I said earlier, it's a proof case that as demand for Bitcoin rises, you can have incentives for miners in the form of fees, on the Bitcoin network that will help the security of Bitcoin in the long term. And what I mean by that is, for Bitcoin to remain secure, you have to have miners pointed at the Bitcoin network, and miners need to be incentivized to point at the Bitcoin network. And so fees from usage on the network is one of those incentivizing factors. So I think it's a lot to do about nothing as we sit here today, but it is interesting, right? It's kind of helped me kind of evolve my thoughts a little bit over the weekend. Let me pull up another thing. Yeah, so it was a CoinDesk again. The crypto market saw 2.3 billion in meme coin trading volume over the last week. That's irrelevant to what we're talking about. I thought that was a bogus pull up by Josh. I thought it was something in relation to the Bitcoin action, but no, it's important to talk about because. Go ahead.
It is important to talk about because that means that there are participants in the crypto universe that are doing things. They're transacting and they're participating. They're trading their fiat money for cryptocurrency, crypto tokens, or other
coins.
It doesn't even matter what they're doing. The point is that they are facilitating demand for what the network provides, whether it's the Bitcoin network. look, this whole thing about Bitcoin's fees being high is old news. If you rewind the tape a couple years, there's so many new participants that don't know about what it used to cost, and people still used it. Changes were made. It birthed the Lightning Network. So out of this, perceived short-term calamity, there will be some innovative solutions that make their way to the market, because this is how things work in the world.
No,
There are smart.
innovation is the word, right?
Yeah,
But
innovation is not dead, no matter what. No, despite what Ginsler and Pocahontas want to, try and force on us in terms of regulation, it's the strangleholds of legislation. Like, it's not going to work. Innovation remains, and I think every time some politician gets up and talks about doing this, and there are 10 other patriots like me that stand up and be like, you're out of your mind. And maybe my conspiracy hat gets a little bit bigger, is that they understand that if they get up there and say these things, that it will light a fire under people in the public to go out and innovate. And then, but that's my
well,
conspiracy for the
my
day.
thought. We welcome conspiracy here. You know,
Yes, we
it's
do.
but here's the thought, though. I mean, so Bitcoin, in its ultimate final form. I mean, I'm convinced it'll be a settlement layer between nation states. Okay, and base layer Bitcoin, when you're transacting in volumes that are that high, or with something that has that much value, you kind of expect there to be fees, right? And so the innovation then occurs on an individual level. So how do individuals transact in Bitcoin? Well, they do that, in theory, with a Lightning Network. And so I don't think this is anything to kind of freak out about or worry about. It's just another day and another. I mean, we will continue to go through these kind of, battles, if you will, on crypto Twitter and Bitcoin. And, that's the tweet that I saw. Somebody was complaining about buying coffee in El Salvador and having to pay a high fee, and they're like, "This is a crime. This is terrible." It's like the guy commented, he's like, "Just use Lightning. Like, innovate. Stop complaining. Like, complaining about this isn't going to get you anywhere." But as these protocols advance, as they progress and become more used, I mean, we're starting to see what this might look like in the future, which I think is a good thing, right? It kind of gives you a glimpse into, as demand rises, and so people that say right now today that Bitcoin could handle 4 billion users are missing the point of what's currently happening with some JPEGs, right? Like, this is something that I don't think people really understand. Now,
The loudest voices usually are the least educated and have the least amount of understanding.
and
It's
and,
just
and the use case for Bitcoin for me right now is counterparty risk from the traditional financing system. So I don't use Bitcoin for coffee. I don't use it for anything. In the same way, when I used to be in real estate, I wouldn't trade a tokenized equity portion of a commercial real estate building I use for coffee either, right? Like, that seems silly, that has a lot more value, long term than the dollars that I have. So, these things aren't necessarily, static conversations, right? Like, why in the world would somebody want to do that, other than what the argument is? You want people to use it to get it to circulate if it's really going to be a money. But I don't think base layer Bitcoin is going to be that, right? And we're seeing it right now. It can't be that, and this is just from, JPEGs over the weekend. And here's the other thing. It's only going to get more. Like, these, BRC20, this isn't going to go away. If people like this and they're going to continue to do it, this is going to continue to, add demand for the block space.
so just like, okay, so excellent point. The demand is going to increase, and there's some people. So get this. A year or two ago, Michael Saylor talked about Bitcoin being the rail for the U.S. dollar globally, and people, oh my God. First, a quick side note: does anyone know what flash paper is? Do you know what flash paper is, Josh?
I have no idea.
Ooh, Here, check this out. There's this thing called flash paper. Okay, back in the old days when gambling in seedy underbelly of the city gambling houses, the bookies would write out their bets, and they would take cash from people and write out their bets, and they would write all of the stuff in pencil on flash paper, because at a moment's notice, the coppers would bust in and they would have a candle or a match and they would light it on fire, and they'd call it flash paper because the minute flame hits it, it goes, it burns like that. That's where the term flash in the pan came from. So what I'm trying to communicate is this little amount of squawking from all of these people that think that they're unique and special and different, or it's nothing more than a flash in the pan, because this has happened with the block space wars, the insert other thing that happened years ago, and it's just history's rhyming. It's not repeating of it. It's just rhyming.
Yeah,
So
I would say smooth brain pieces here that it's a good thing, right? It's there's demand, people are getting interested again, and I'm not going to sit here, the bell curve that Bitcoin inscription's good, and then the guy in the middle actually blah 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 blah, and then on the right, Bitcoin inscription's good. I haven't studied this in detail, right? Like to me as an investor in Bitcoin and someone who uses it in a way that's just a counterparty to the traditional financial system, like this isn't going to break the Bitcoin network. Like this isn't going to hurt it, right? This is just like you said, another thing. But you ever see that video where the guy walks out and there's a big gambling place, like it was like a secret underground place, and he was like, the interviewer was asking him, he's like, "Are you aware of the gambling house that's going on in this restaurant?" And he was like, "Oh, what? Gambling? What? I don't." And it was clear that he had just walked out of the gambling place. Like it just he played dumb to it all. Yeah, flash paper. What? I have no idea what that is. But
okay, so the point I was trying to actually get to is that whether we like it or not, the demand for the Bitcoin network is going up, but it's also going to create. There's other follow-on effects here. I think that Saylor's prognostication, or like forward thinking into the future about how, whether we like it or not, I think the demand for dollars globally goes up. It doesn't matter what the Fed does. I think it's that the thing we have a hard time understanding here in the US is that the rest of the world is like the money that people have to use in the rest of the world, they don't trust it. They trust the dollar. Still today, whether we like it or not, I don't care what the mainstream media tries to shove down your throat or do your eyelids like this. It doesn't matter. The Bitcoin, the global nature and unstoppableness, and the ever-growing accessibility, we're getting exactly what we wanted here. We want the Bitcoin network to be used by more and more people, and you can't have an open monetary network and then say, well, I mean, it's only allowed to be used for this thing, but not this other thing. Because,
correct, and that's the point I wanted to make. Bitcoin is a open permissionless protocol, and so on the one hand, you can't say I want more people using Bitcoin, but then come in and say, well, I don't like the way you're using Bitcoin that way. No, this way isn't the way you're supposed to use it. You can't do that. Right?
That's what politicians do. Like, so it's ironic in a sense that there are hypocrites. This will be news to you. There are hypocrites all over the world, but there are hypocrites in crypto Twitter that will tell you that it shouldn't be used this way in one breath. And then when Elizabeth Warren gets up and says, well, Bitcoin is just for money launderers, or what's the guy, Brad Sherman from California said in all over Twitter, there's you don't have to take my word. Don't trust, verify. Look at what Brad Sherman was saying about calling people who use crypto tax evaders. Okay. So if anyone is voicing their opinion that they think this is that we shouldn't allow this particular thing, well, you need to get up in front of you're basically saying the same thing that our political enemies, and I say I mean like this idea of permissionless money that people can use how they see fit without some jerk in the government trying to be a dictator and tell us how we can live our lives and what we can transact and who we can buy things from and when and how and all of the details. You know what I mean?
Yeah, for sure. No, and the tax evasion thing is so silly. Actually, it's insulting because
actually,
It is. This isn't actually, that's actually worth a shit. Like, in crypto, I spend a lot of time and money trying to figure out how to pay my taxes, right? Like, this isn't like something, to be called a tax evader for participating in crypto is insulting, right? Like, the tax system is, it's so screwed up. And so, these people that are participating in crypto are paying taxes, right? I can tell you firsthand. My accountant can tell you firsthand. It's a lot of time and effort and energy to figure this stuff out. And for some dipshit politician to get up there and call me a tax evader is insulting. I mean, it really is. And so that whole thing, whatever they're saying, is complete. And I talk to anybody in crypto. Talk to anybody that's been doing crypto and that's been successful in crypto. Paying your taxes and figuring out your taxes is one of the biggest pain points. But we do it because we're not criminals. Like, this stuff it's crazy for them to get up there and say. But the last thing I wanted to talk about today was over the weekend. We had Binance experience the largest withdrawal volume in its history. They pulled out 160 plus thousand Bitcoin worth over $4.5 billion. Now, I don't know what's going on at Binance. CZ, who's the founder of Binance, came out and said, there was, because of the high demand on the Bitcoin network, they had to pause withdrawals. They did it twice. They came out this morning and they said they're enabling the Lightning Network. CZ is interesting to me because Binance is such a big exchange. Some people hate them, some people love them. We in the United States can't use them. There's Binance US, but that's blocked in several states. I don't know what's going on with Binance. Every time something happens with Binance, what you have to realize though is there's a lot of people that want Binance to fail, and a lot of that is the Bitcoin community, right? And so, from a crypto perspective, I want Binance to be successful. As long as they're honest, and I can't tell you if they are or they aren't, right? But they are a big driver of adoption and use in the industry. And so anytime there's anything that happens, you get all these tweets from all these, maximalists that want this to fail. And if CZ is doing something wrong, if he's running his exchange wrong, then it should fail. But, I think you got to take it all with a grain of salt. But then the other thing you have to do is you have to be really careful. That's a lot of Bitcoin that left the exchange. So we'll see what happens. But I just wanted to touch on this real quick because you'll probably see it all over Twitter. We'll see how it gets resolved or doesn't get resolved. If it doesn't get resolved, you can expect the market to take a giant dump. That is a buying opportunity, in my opinion. So we'll see how it plays out. You have any thoughts on this, Ted?
Yeah, at the end of the day, I think one thing that people don't like about the CZ guy is that he knows his customer and he knows how to talk to them. Like I'm talking about the majority of them. There's always the outliers on either end of the spectrum. And like a good politician, I'm not calling him a politician, but I'm saying like a good politician, which is kind of an oxymoron, good politician, but a smart politician, I'll say, knows how to speak to the most number of their constituents, because you can't please everybody. And that's a recipe for failure. But what you can do is try to speak to the bulk or the largest number, because that gives you what you need to continue operating successfully. And what I'm trying to communicate here is that I'll argue that the average Binance user doesn't really understand, hasn't spent as much time as, say, someone else who has spent the time to understand like how the Bitcoin network actually functions, what the layer 2 solution called Lightning is, and why. I think what they've been doing is they've been waiting on implementing Lightning until they didn't really have much of a choice, meaning that the adoption, consumption, and demand drivers that are global and they're huge and you can't influence them. Yet, basically in trading, sometimes you have to wait for the trade to come to you, is what I'm trying to say here. And I think that Coinbase, Binance, and all like the Kraken's actually ahead of the curve. They already have the Lightning Network implemented. Okay. But I think that the biggest players have to wait for the demand to show up at the front door before they respond to it. So I think it's interesting that, I guess what I don't understand is this 160,000 Bitcoin Where did it go? Did it go to cold storage? Did it go to another exchange to be sold? I don't know this. How the heck would I know? All I know is that despite all of these things, the fundamental base case for Bitcoin hasn't changed. The global macroeconomic drivers, the central banks, the debt based system we live in, the need to roll the debt every 3.5 years, and the consequences if we don't, the monetary policy here in the US, the monetary policy from the Chinese central bank. There's a list, a laundry list of things that made Bitcoin a great idea to manage all of the counterparty risk in the monetary system as it is today, to protect us from all the things that it will protect us from. That none of those things have changed. And to your point about this being a buying opportunity, if price comes down, if price pulls back, all that's happening, in my opinion, and from my perspective, is that some weak hands got in, took some outside risk, thinking that Bitcoin was going to the moon, and their positions are going to get closed out because they're over levered. There's going to be a lot of potentially retail interest. I mean, like individuals that are just chasing a trend, like insert trend name,
Well,
insert a
meme
bunch of
coin
people
is
chasing.
these meme coins, right? It's a perfect opportunity to wipe everybody out, right? Because everybody's in this is in this bull-tard mode with these meme
Yeah,
coins. And look, we like meme coins. Like I think it's great for crypto, adoption. And we bought some guac over the weekend. Do not do that. Do not take this isn't financial advice, but I got the Saga phone. I'm loving it. It's fun to use. It makes holding the entire ecosystem in your hand it's a different feel. It's fun again. But look, I spent $50 on something to see how it would work, to learn how Jupiter works on the Solana ecosystem, to get a feel for what everybody was talking about. So it was a learning experience. What I didn't do is I didn't take 50% of my portfolio and dump it into something that I have no idea how it works. So we're not above meme coins. It's fun, right? And most people in crypto play around with this stuff, and it gives you something to talk about. It's fun. Yeah, maybe the $50 turns into 500. Who knows? Like that's crypto, but you know.
interesting thing I wanted to share is that people will spend twice that on dinner and drinks and never give it a second thought.
Yep.
And what is interesting to me about like everything in like all the different perspectives that come to the cryptosphere is that if someone's taking $10 or $50 or whatever their monetary unit is and they're participating, they're learning, and that's the most important thing, I think. And I argue in that bell curve example, the biggest number here are people that are genuinely interested in understanding like what it is, how it works. And at the end of the day, we're people and we want to benefit from things. I mean, we do things like get up, go out, earn a living so we can live. I mean, we can acquire food, shelter, water, and have fun and do fun things. And that's what like most people want, is they just want to live their lives. And if this is if crypto is a way that helps make our lives better, which I think it does, then there's no harm. And the point I'm trying to get is that you could take $100 or $50, whatever, go out to eat, never give it a second thought. What are the odds that you get any return on the money that you spent in that case? The odds are zero. What do you
No,
get in
and
return?
not everything needs to be a financial investment, right? Like,
No, but I'm just making the comparison.
no,
Is that
it's a great comparison. It's just it is funny how people work now. Like what I would say, if you're learning about all this stuff, your money's most but likely spent better buying Bitcoin or Ethereum or an act, something that over time has shown that it will retain value. But the the meme coin stuff is fun. It is. It's there's no harm in it if you do it responsibly, right? And this is something that we talk about all the time, is that manage your risk. And $50 for me on a meme coin is a perfectly manageable risk. And kind of the last point I want to make here is that with the Binance stuff, you don't have to trust ZZ. If you buy cryptocurrency on Binance, pull it off the exchange, get it into cold storage, get it into a wallet that you control, CZ becomes, irrelevant to you at that point, right? The risk here is that people will continue to not understand this, that you cannot leave your crypto on these exchanges. It's a death wish. You just can't do it. And, I don't think any exchange owner worth his weight would say, yeah, leave your crypto on my exchange. I mean, Jesse Powell at Kraken came out and said, don't leave your stuff on my exchange. It's a liability for me, right? And so you can look at that and you can watch what they say. And, CZ he's a big player in crypto, has been for a while. It's a huge exchange. Just keep your eye on it. If you use it, take your crypto off the exchange. I mean, it's just part of how this all works. Then that way you don't have to worry about it.
One thing that hasn't changed that you just articulated is that you can actually own your Bitcoin, despite anything that's happened in the last 14 years. You as an individual can move your Bitcoin to a wallet that you have 100% full control of. And that, despite what anyone says on Twitter today, has not changed. So I was talking about fundamentals earlier, like the fundamental tenets still apply. They will always apply.
Yeah, and you have to remember, as everything gets crazy here, which it is going to get crazy. I mean, you've got all kinds of issues hitting at once. You're going to see, I wouldn't be surprised if we get another huge FUD campaign into all the craziness with the debt ceiling. There's a huge issue happening this week on the border with Title 42 apparently being released, and there's a large amount of people that are coming in. I mean, there's all kinds of political issues, and so your point, Ted, about the fundamentals not changing is very poignant, right? Because you got to remember that in the face of all this, if we get some craziness, if the markets go crazy, if they dump, and I made a tweet over the weekend, put on my conspiracy hat. I'm in this for the long haul, but you got to think about it from the position of, if you can control markets, right? And this is people will not like what I'm going to say, because apparently that's not possible. But if you had the ability to crash all these markets, you would, right? If you're BlackRock, or if you're the U.S. government, or if you're somebody that wants to do this, right? And look at what they've done historically, and look at what they're going to do. The real estate's a great example. Look at what they're doing in New York, okay, with these gas stove things. This is where this stuff gets interesting, because they're putting these mandates in on landlords that they have to install all these upgrades to their buildings, okay? So what does that make landlords do? They sell. And guess who the buyers are? BlackRock, the big players. And so take that to crypto, right? If you get some crazy regulation or some silly thing that happens from the government, who's going to step in and buy this stuff? Well, probably BlackRock, right? And so that's a conspiracy theory, fully capable to admit that, but they don't want to buy this stuff at what it's worth. They want to buy it on the cheap. So if you get some of that, if that conspiracy does happen to present itself, I would look at that as an opportunity to buy.
That's the most important thing to understand here, which I don't think what you're talking about is conspiracy at all. There's too much evidence in the public domain about how markets get manipulated. But the thing you just said is, remember, during all these crisis scenarios that we witnessed, 2008, 2009, when assets were puking, like the S&P 500, NASDAQ, during COVID, all this prices going, the Dow was down, 2,000 points in a day. Well, guess what? There was somebody buying those things, all of them, every single, nothing that we really care about, like the stock market, gold, Bitcoin, Ethereum. None of those things went to zero. Some garbage went to zero, yes. Like some low float, pumping up scam penny stock, zombie companies stocks went to zero, okay? But what I'm trying to communicate is that there was even though prices came down and markets looked like they were dying on those days in these crisis events, there was a flight. Capital was just moving from one thing to another, and there were people buying big time, or bigly, I should say. So what I'm trying to communicate is that we may get a little price movement here, a little volatility may show up. Like, oh my gosh, Bitcoin is what currently at 27,952. Oh my gosh, we're back to prices we haven't seen since last month on April 5th, 30 days ago. We're back to the same price that we were, and it's not gone terribly much lower than this, meaning there's substantial demand for Bitcoin at these prices down in the 27, 27.5, 28 range still today, despite all of the mayhem and all of the global chaos and all of the narratives that are being shoved down our throats in the mainstream media. And yes, people are going to react to these things, but I'm telling you, the big players are looking for opportunities to be the buyer of last resort. Just like the CarMax, your local CarMax will buy your car today, but not at a price that you're going to like. They'll write you a check today, but they're the buyer of last resort, and they can wait. That is the key right there. These jokers can wait just long enough to where us normies panic and lose our resolve, vanishes, and we capitulate. That's what the word capitulation, you see this in market term, people talking about in markets all the time about capitulation. And when there's blood in the streets, that's when the smart money rolls in and buys and buys and buys hand over fist when everyone else is, crying and the world is ending. So
And so
that's
how
the
does a normal person handle all that, right? You just buy weekly, dollar cost average or monthly, and then you don't worry about any of it. Doesn't matter to you.
that's right. And exactly. That's
Because
that,
that's
that,
the
that,
only
that
way you can mitigate this risk over the long term. And we can sit here and speculate. Is this going to happen? Is this not going to happen? I've got a plan. If that does happen, hopefully it doesn't happen, and we just slowly work our way back up. I find that to be almost too good to be true, but hopefully that's what happens. But yeah, the way you handle that is you dollar cost average in over a period of time. That's it.
yeah. Last thought is just the short term noise. If you look at the retail calendar, we've got New Year's, we got Valentine's, we have all of these things that are programmed into our psyche. And the mainstream media has programmed us as a society to react to the extremes. And a lot of this reaction that us as individual consumers have to these news events and the things that we read in the mainstream, like read in the newspaper, watch on TV, it does what? It triggers purchasing. It triggers people to spend money. And I hate saying it, but it's true. I've been on the other side of the table here. I've impulse spent my feelings many, many, many times, and it's a human thing. And I'm not criticizing anyone for it because I'm one of the worst offenders. Okay, in the past, what I've let, but what's the antidote or what's the solution is that you don't have to pay attention to these things because on just a long enough timeline, which isn't really that long. Okay, we're talking like months and years here, which isn't a lot in the grand scheme, is that if you're slowly acquiring the things that are going to help protect your purchasing power in the future, meaning assets, if you're doing that, if you choose and you take the appropriate advice from the appropriate person, that's not us, to do this, then you can tune out because the mainstream cycle is on repeat. There's just like the retail calendar is on repeat. Every year at the same time, Easter comes along. And what happens? People go out and buy a bunch of candy, they eat it, and they're like, why did I do that? And yet Easter comes around the next year. And what do they do? They do the same thing. Okay,
Well,
it's programmed.
what you're saying though, is psychology, and markets are based on human psychology. And so, if you are a big player in these markets, you are aware of that, and you'll use that psychology to your advantage, right? And so, as a normal person who isn't aware of that or is slowly becoming consciously aware of that, the way to sidestep all that is, like I said, just dollar cost average. I mean, it seems boring. It seems, you know, our nature is to try to catch these things at the bottom and some at the top. You're never going to do that. Nobody does it. And so, to sidestep all the psychology, and the reason you want to do that too is for your own mental health and mental clarity in these markets that are crazy, right? And the only way to truly participate in a way that won't make you crazy is to have a plan. Don't risk too much of your own money, right? But that you can't pay rent, or make it a percentage. It's just another asset bucket, right? You've got stocks, you've got gold, you've got Bitcoin, you've got crypto, right? Allocate a percentage based off your net worth that you're comfortable with. It could be 1%, it could be 5%, it could be 10%. It doesn't matter. Just make sure you have a plan with this, and don't just see something and spend half your available capital jumping into something. I mean, that sounds simple, but psychology is really hard to resist, because when you see all this and you see other people making money, your nature is to say, "Oh my God, I gotta get involved." And so I'm like that. Meme coin season, hell yeah, let's go play. Like $50, sweet. Like not 5,000 or 50,000 or 500,000. That's I feel like I'm kicking a dead horse here, but like literally, it's just
It needs to be said. I mean,
it's that simple. Just don't risk too much on it, right? Like, and have a plan.
So-
That's the most important thing. But I think that's a good place to wrap it up for today. As always, especially when we talk about different meme coins, nothing we say is financial advice. We, Ted and I, are enthusiasts. We are passionate about crypto, but we are not financial experts. You shouldn't listen to anything we say. If you participate in these markets, you're doing so at your own risk.